Hey guys, this is Trevor from Wyckoff Speculator. It's been a long time since I posted anything. I was out of town for a couple weeks on vacation, and I decided to take a couple weeks off from posting. I kind of felt I was getting a little distracted, and I wanted to go through some of David's book and also do some other study on stocks. And I just didn't have time to really post things. I kind of felt like my time was limited. So I took a little break, but I want to start posting some some more on my little trade journal. Mostly videos, though. I kind of feel I'd rather do a 2 minute video giving my quick recap of what I did. Maybe if I learned something new, pass it on to you guys and give my little interpretation of what I think might happen the next day. Um, but I want to give a plug for David, a friend and mentor to me. Um, Very good book. As you know, I've spent time with him, learned a lot. I'm even learning more from the book, things that I didn't catch while we were doing our one-on-one time. So for those who don't have the means to uh, spend the money to do the one-on-one time with David, the book is a great substitute. He does a great job of going through charts and explaining things, and you learn something new from each page. Um, Excellent book. There's one little take I got from it since I was reading it the other night. It's actually in the introduction. I think David nails it on the head um, when it comes to what expectations traders have, things how they want to put things in a box per se. Let me read the quote to you. Wyckoff wanted to teach students how to develop a trader's feel, intuition, specificity sells better than intuition. It's more tangible. I believe there is too much dependency on recognizing patterns of behavior rather than on the art of reading bar charts. These patterns can quickly become cookie prints, like geometric formations into which price movement is stuffed by these looking for a quick, no think fix. They lead to rigid rather than creative thinking. They often frustrate the new student of Wyckoff analysis who might not realize the world of chart reading is gray, not black and white. And I have to agree with David wholeheartedly. I know the times I've missed great opportunities is when I try to stuff things into a cookie print, per se, and if it doesn't look exactly how I want it to look, even though my interpretation is telling me it's going to go up and there's bullish bars, but maybe my 310 oscillator wasn't just perfect. I didn't pull back how I wanted it to pull back. My EMA is not going up on all my time frames, so I'm a little sketched on it. Um, this is when you miss out, and your interpretation, you could be spot on with it, but because everything wasn't perfect, you don't take a trade and you miss out. And I think I myself have done this, and the more I get into specifically this form of Wyckoff analysis, I find that if I get too rigid, I don't allow myself to be creative in my thinking, I tend to make mistakes. So I thought that was a great point in his book, and I knew he probably wouldn't mind me quoting from it. But excellent book. You should all read it. One thing I haven't been doing as much of is paying really close attention to these horizontal lines and kind of building a story around these lines. You have all the other elements in Wyckoff, like shortening of the thrusts, volume. Is volume increasing on the down waves or decreasing on the down waves in a down move? Those are all important. But if you place them in context to these support levels, I guess the bottom or tops of the trading ranges, um, I think it gives you a wealth of information that you would might pass by on if you don't specifically look for things. Two, in when drawing these lines, you need to be a little more liberal in how you draw the line. Um, for instance, I probably would have drawn a line here. This would be a great opportunity to short here when we broke through it, came up and tested it. Um, then, you redraw it higher, slightly higher, even though uh, this very much might be a good place to leave this line if price came down to there, which it doesn't. Price firms up above it, so you think, okay, this might be a better line to draw. So there is some subjectivity to this, and this is where the creativity comes in. Um, anyways, there was a lot of great trading opportunities around here. I was out of town for a lot of it. Some great trading. Some of the best trading I'd seen in a while, actually. But I couldn't really trade it. I was in a time zone where it just didn't make sense. Plus, I'm on vacation. I needed a break. But my interpretation for tomorrow is, I am very bullish overall. But I think there is some signs of weakness starting to show up where we could get a pullback potentially to the 1593 and a half to the 1595 and a half level here. Most of the reasons for it are, well, on this particular time frame, we have very high volume at an overbought condition on the Weiss wave. Now, high volume is meaningful at the for trend change, and also, well, I guess trend change in both directions. Here we had strong demand, but it's coming off of a bottom, so this is telling me this is demand most likely. Here we're getting high volume at an overbought condition. This is giving me a little bit of a red flag. We could go up higher and hug this trend line for quite a while, but there's a good chance that we could pull back down to this level. So I'm keeping that in as a potential scenario. Some other reasons why I think we could pull down into that area is on Friday we had lots of effort here with very little results, and some supply came in towards the end of the day telling me that, well, first it's building a trading range, which is expected generally in after having a big move like that. So really I'm going to frame my trading around this. Also too, it's a day after a trend day, so generally markets behave a certain way. A lot of times we get a rally in the morning, we test the high of the previous day, and then we pull back into the previous day's trading range. Generally a sell-off would end around where afternoon selling or buying and selling had occurred, which is basically the bottom of this trend channel. So something I might look for tomorrow is an up thrust of this in the morning, and a short going into lunch, maybe covering it around here. If for some reason lots of supply comes in and we break this level, I'll look to short a test of that level of ice and look for it to come down into the 1595 to 1593 and a half level. That spot I'd probably start looking for some strength to come in and maybe going long. So anyways, that's my game plan for tomorrow. It's basically fade the morning rally if we have one, unless we get lots of volume and we break out above this level. I definitely won't short, but if we up thrust it, I'll look to fade that short in the morning. Cover in the afternoon, and probably take it easy on Monday. Mondays generally aren't great for me personally. And after a trend day like Friday, we'll probably digest the move. Though be on your toes for a pullback to 1595 and a half to 1593 and a half. Anyways, that's my game plan for tomorrow, and I hope you have a good trading day.